Hi there, welcome to kneppyinvests. I thought I'd do another week that was video because a lot of companies released interesting announcements during the week. We are seeing a plethora of not only AGMs but also trading updates. And trading updates are my favorite type of announcement. Now, I do have, at last count, about 24 companies to get through. I did have to exclude quite a few companies that I wanted to include, but I only have about 50 minutes to spare, so I'm going to have to try to get through this video particularly quick. So we're looking at 24 companies, and we'll also touch upon the XJO, simply because the XJO is at a really interesting level right now. In fact, the XJO has closed at the week at 6,900.7. Now, if you've been watching some of my previous videos, you'd know that an important support zone for the XJO is between 6,900 and 7,000. And right now, the XJO is right at the bottom of that important support zone. So I actually expect a bounce from here, but I wouldn't be surprised to see the XJO go any further lower than this, maybe particularly lower if the market remains wary about the economy. And if the XJO does fall a little bit from here, say below about 6,880, that would mean we're almost at a one-year low in the XJO, which is interesting because I mentioned in one of my previous videos that when I listen to Ausbiz The Call, there is one particular expert who says we're in a bull market right now. And then lo and behold, I was listening to Livewire the other day, and another expert, completely different expert, also said we're in a bull market right now. In fact, this person says we're in a continuation of a long-term bull market. And when you look at the XJO, that sort of thought is absolutely ridiculous. We're definitely not in a bull market. If you want to know what a bull market looks like, let's go back to, let's have a look at the weekly chart. And you can just see the weekly chart. It's been going sideways for over 2 years now, the XJO. So in a true bull market, now you could say long-term we're in a bull market. So we've been trading in this trading channel for since the end of the GFC. But if we go to just prior to the GFC, this was a bull market. This is a classic bull market when the market goes from probably fair value or maybe even undervalued back in 2003 to being significantly overvalued in 2007, a 4-year bull market, when the XJO went from 2,800 to 6,800. That is a bull market. What we have now on the XJO, the Australian market, is not a bull market at all. That's just my opinion. I'm not an expert. So maybe this is just the start of a bull market, but it's been going sideways for, as I mentioned, 2 years. And I've spent too much time on the XJO. So let's have a look at some interesting announcements from companies through the week. Now, the first company I want to look at or talk about is a company called LBT Innovations. The main reason I want to talk about this company, I'll just make my head a little bit smaller, is because I do follow this company simply because I own this company quite a few years ago. We actually have a look at the monthly chart, and I was just fortunate enough, you just see this massive spike in the share price of this company on the week 3rd of October 2016. When the share price of this company went from about 11 cents to a high of 76 cents. No, the high was not 76 cents. The high was about $1. I still remember it was above $1. So there must have been some sort of adjustment to the chart of this company. And then the share price has just completely collapsed since then. So I do follow these companies that I have sold out in the past just to see if that was a good decision, or I'm interested in how the company is performing. And that's my main reason for following LBT Innovations. I'm just interested to see how this company performs. Unfortunately, the share price of this company is now 0.5 cents. So I sold at $1, the share price is now 0.5 cents. So the share price of this company has fallen 99.5% in the past 7 years. Now, the reason why I want to talk about this company today is because the share price actually fell 36.6% on the 13th. So this was last week, which I completely missed. And the share price has been quite volatile since then. And the main reason the share price fell a fair bit on the 13th of October is because of a capital raising. So this was a $4.5 million capital raising at 0.5 cents, hence the share price. Now, the share price previous to this was 1.1 cents. So this was a 55% discount. So it's not surprising the share price fell to 0.5 cents. This is why I don't like companies doing capital raisings at a significant discount, which this was. They're issuing 900 million shares and 900 million options. The reason that is important, and you don't have to do any calculations, because 4.5 million shares, or $4.5 million at 0.5 cents, which straight away means 900 million shares, but they're also doing options. The reason that is important for shareholders is because right now, before the capital raising, the company has only 355 million shares on issue. So this is a significant dilution to current shareholders, and the share price now has completely collapsed. Now, one of the reasons why they're doing a placement or capital raising is because this company, and they did have FDA approval for one of their products. That's why the share price popped up in 2016. But the company is not really able to sell their product. They're not bringing any cash flow or not much cash flow. So this is a company to avoid right now until they can prove their business model, which they have yet to do. Now to a company I'm definitely following, and that is COG Financial. And this company released a business update or trading update on the 16th of October. This is the Q1 financial year 24 update. And the main reason I want to talk about this company is because I am interested in COG Financial and their financial, or the first quarter results, $6.2 million in NPATA, which is net profit after tax and before, what's it going to do? Underlying net profit after tax and before amortization. So $6.2 million. I just wish it was just NPAT, but probably amortization is probably high. So $6.2 million. The market cap of this company is $250 million. So this is 1 quarter of NPATA of 6.2. So if you just analyzed that, that's about 24 to 25 million, which means the P ratio, if the NPATA is not much different from the profit, is around 10. So I do think there might be some value in this company, but the share price is in a downtrend. This is the main reason I haven't really taken a position in this company, but definitely a company I do have on my watch list for a potential purchase in the future. Now to a company I did purchase during the week, and this is Dropsuite, a company I have owned in the past, and this company released a business update for the third quarter of financial year 23. So slightly different financial year for this company, and everything's still moving in the right direction for Dropsuite. Annual recurring revenue up another 3 million. This is Australian dollars. So everything up. But if I wasn't to buy this company, there would be one reason, and that was the monthly ARPU in US dollars, which was only up 5%. Monthly ARPU in Australian dollars was up 9%. And the ARR, probably should start with that, ARR in US dollars was only up 5% compared to the ARR in Australian dollars, up 10%. So currency, or the drop in Australian dollar, really benefited from this company. So just the very fact that ARR and monthly ARPU was only up 5% in US dollars was a slight concern. But that's quarter on quarter. When you look at the previous corresponding period, we are still talking about greater than 10% growth for this company. The other reason, or one of the main reasons I did take a position in this company, is simply because this company generated cash flow of $2 million in their operations, and cash on hand grew by about 1.6 million in the quarter. So that's good growth in cash on hand, nice operating cash flow, and the share price really hasn't done much. So share price did react initially quite well. Share price went up to 26 cents, but share price has gone sideways. That's a good thing, because overall the market has dropped during the week. So this has held strong. And we can see the share price really took off in April last year to a high of 38 cents in July. And then we saw the share price decrease significantly on pretty good volume. That's the reason I sold. When I ever see a massive decrease in share price, a 21.6% decrease in share price on the 19th of July, that is actually a sell signal. And I bought back in at lower prices. So I'm happy with that. But this is a company I just want to hold on for the long term right now, because I do think this company does have the potential to grow further. So Dropsuite. Next company I want to talk about is a company that confounds me. Not the company itself, but the reaction from the market. And this is Xtek. So they released a couple of announcements during the week, an investor update on the 16th of October, and then they released another announcement in regards to an order for HighCom. This company is changing the name from Xtek to HighCom. And for some reason, the market loved what they released on the 16th of October. Share price on that day rose 15.7%. And the share price, or the chart, looks really interesting right now. So let's have a look. Xtek, long-term downtrend, and the share price has increased, not quite doubled, from the 21st of September. The share price has gone from 27.5 cents to current share price of 46 cents. So I'm not sure why the market completely sold off on Xtek from March this year through to September. And it looks like fortunes of this company, sentiment of this company is starting to shift. If we look, and one of the reasons why I'm not bearish about this company, quite different from the market, is if you look at their investor update on pages 16 to 19, they're quite bullish. So that just makes me think the market had this company completely wrong. So here we are, news update, talk about division wins, ballistic divisions, proposed name change to HighCom, because it seems like HighCom is where they're getting a lot of their positive momentum from. So I don't necessarily mind this name change. Typically, I don't like name changes, particularly if a company already has a bad name and they just change their name because of that bad name. This is not necessarily a bad name. This is just sort of a shift in how the company is performing, where their growth is coming from. And I sort of talk about that in this particular announcement. So things are moving in the right direction for this company. And I think the sentiment of management was completely different from the sentiment of the market. And maybe we are getting an alignment between the two right now with the share price increasing a fair bit. Our next company I want to talk about is a company called A1M, AIC Mines. I actually am doing a video on this company. It was a request. They released their quarterly report. Now, this company is interesting, a markup of $134 million. And if we take a look at their presentation on page 3 here, we can actually see how they performed in the last quarter. And the market actually did like it, which is understandable. So this is page 3. The Alois copper mine. I'm pretty sure this is a copper miner based off this copper mine page. And I think this is the only mine. So remember, markup $134 million. Positive cash flow of $8.2 million after capital investments. The very fact that copper prices have fallen makes me think this was a pretty good quarter from the company. So they were able to produce $8.2 million of, we'll say, free cash flow in the quarter. So in the quarter, times that by 4, that's $32 million cash flow over the whole year, analyzed, which makes me think there could be some value in this company. And the market liked it. So it's got to be careful. It's not AIM, it's A1M. If you do AIM, it's AI Media, but we want A1M, which is AIC Mine. So a lot of negative sentiment in this company. You can see the share price in a well-defined downtrend. So this is not a turnaround in the company's fortunes. So even though the share price did increase by, what was it, 13.2% on the day, it had decreased significantly the previous week before that. So the share price has just moved into the shorter-term moving average channel. So at this point in time, no change in trend for this company. However, you might be able to argue there's some pretty good value in AIC Mines right now at a markup of $134 million. Now onto Hub. So actually, I could do Hub and Netwealth together, but I won't. I'll do it separately. So the only reason I wanted to include Hub is because they did release a market update. And I'm not even going to talk about the market update. I'm going to talk about the market reaction for Hub. And this was really interesting market reaction. In fact, if you just look at the daily chart, you can see a lot of volatility on the 17th of October when they released the update, and even the next day, the 18th of October. Share price went from a high of $35.50 on the day they released the update down to a low of $30.50 the next day. So the share price fell by almost 20% in 2 days, even though the initial reaction from the market was really positive. So if you look at the 5-minute chart for Hub, you can see when the share price or the company started trading after the release of the update, the share price actually opened up 5%. And then the share price absolutely tanked the rest of that day. And then the next day, the share price fell significantly in the first 2 hours of trading. In fact, the share price fell from 33.60 down to $30.60. So share price fell 10% in that first 2 hours. Share price has recovered. So I'm not sure what caused this panic. Maybe those who read the market update or the trading update a little bit more closely saw something they didn't like in it. So really interesting trading for Hub24. And this might become relevant when we talk about Netwealth in a second, because that company also released a trading update. Now to a company who saw the share price decrease 32% on Friday, the 20th of October. That is Liontown Resources. Is it Liontown Resources? Let's have a look. I'm assuming it's Liontown Resources, yes. So this company was under a potential takeover from ARB, Mayne, whatever it's called. And on the 16th of October, Albemarle and Liontown not proceeding with proposed schemes. So this is always going to have a negative effect on the share price, particularly if the takeover was at a significant premium. I say this all the time. It's one of the reasons why usually if there is a takeover bid for a company I own, I will sell pretty soon after takeover bid because the chances of the takeover bid going through, not 100%, actually lower. And if the takeover bid doesn't come, and if it's the takeover bid is at a premium, sometimes you'll see the share price fall a significant amount. But not only that, the company also did a capital raising. So this capital raising was $365 million at $1.80. 203 million shares, which is not a significant dilution, nothing like LBT Innovations. They already have 2.2 billion shares on issue. The very fact the share price or the capital raising was done at a significant discount. So you can see the share price fell 31.9% and still the share price is 10 cents higher than the capital raising. This is one of the reasons why the share price collapsed. Well, one of a couple of reasons, but when you look at the chart, you can just see, here's that takeover bid from Albemarle back on the 28th of March. Share price increased 68.5%. Share price kept on running, not sure why. And then share price has fallen all the way back down, not quite to the levels it was before the takeover bid, but it has fallen near there. Anyway, on to Bapcor. I've already done a standalone video on this, but I just wanted to do an update on the chart. So the share price fell, what was it, to 11.5% on the 17th of October, and then fell another 7.6%. So the very fact there has not been a bounce, there was a small bounce on the Thursday, share price rose 2.6%. But if you just take a look at actually we'll take a look at the 1 hour chart. If you just take a look at the 1 hour chart, of not much of a bounce, a very weak bounce, and the 3 hours on open on the Thursday, not a lot of volume either. So the market didn't like this announcement from Bapcor. It was an update, trading update at their AGM. And yeah, really weak looking chart for Bapcor. And the last time share prices were this low, if we take a look at the weekly chart, we're back in June 2022. Remember, that was the overall weakness in the market. And if the share price falls any lower than $5.40, the last time the share price was that low would have been during the COVID-19 financial panic recovery. Shares on the way back up. On to the next company I want to talk about is Mitchell Services. Now, here is a company that did release an interesting quarterly update. In fact, they gave us numbers on the 18th of October. Just going to turn my page here. On the 18th of October. Now, the numbers actually look pretty good. So revenue of 64.8 million, and this company has a market cap 70 million, I'm guessing. 70 million. 75 million. So keep the market cap of this company, just keep that in your mind. So revenue of 64.8 million, which means nothing. So EBITDA of 11.6 million. Operating cash flow, this is 1 quarter, of 10.3 million. Now that does include capital expenditure. Quality profit before tax, 4.8 million. Annualized return on invested capital, 20.3%. And if you know anything about me, you know I love return on invested capital, 20.3% of return on invested capital. That's a really good number. So on first inspection, that looked really good. Profit before tax of 4.8 million for a company with a market cap of 75. If you analyze that, we're talking about profit of, say, 20 million or just under 20 million, which means the PE ratio of this company is less or lower than 4. But that's not the end of the story, because if we go to this particular page, there's a couple of red flags here. Average operating rigs from last year to this year actually fell. Number of shifts of this company, this is a driller, by the way, fell. So even though revenue, EBITDA, earnings before tax, operating cash flow all rose, the very fact the number of shifts and operating rigs actually fell is a little bit of a concern. So that's the one red flag I did see for this company, and it seems like the market also saw a little bit of a red flag because the share price did not react. Non-reaction from the market. So even though there is possibility, there is some value in this company right now, the market is not convinced. The market's not convinced, I'm not convinced. Well, that's not true. Sometimes it's true. Cettire, it's up today, did release another trading update, or trading updates it seems. And the only interesting thing, everything's up. Growth versus previous corresponding period, gross revenue up 98%, sales revenue up 92%, active customers up 69%. No mention of adjusted EBITDA of 8.7 million. So you have to really dig deep into what adjusted EBITDA means. The main thing I liked about this one is net cash increased to 59 million. So what was it at the start of the quarter? At the start of the quarter, it was 46 million. So cash on hand actually increased $13 million in the quarter. Now, this company is, I wouldn't say ridiculously valued, but it is valued for a lot of growth. Well, and the company is giving that growth. So current market cap is $930 million. So an okay announcement from the company. However, the market wasn't that enthused. And the share price has fallen a fair bit during the week. Share price fell as low as $2.20 on the Thursday. Share price still in an uptrend, but we need to see a bit of a bounce from here. Well, I'd like to see a bounce from here. I'd like to see this longer-term moving average channel as a support zone for this company. So hopefully next week is a good week on the market because it's not Cettire might have more to fall. Now, a company I would always classify as a low-quality company, Mayne Pharma, and you'll see why I would classify this company as a low-quality company, released a trading update for the first quarter. Now, even though I would classify this company as low quality, and the main reason it's low quality is because this company has completely sucked. When I say completely sucked over the last few years, I mean completely sucked. It's really disappointed for those who wanted something from this company. I'm not a shareholder of Mayne Pharma, but it's just disappointment after disappointment from this company. And you can see the disappointment of this company when they give this trading update, and it's actually quite positive. So net sales up, gross margins up to 58%, sales up to 92 million from 68 million, but underlying EBITDA still negative, cash EBITDA still negative, but it's not highly negative. So last quarter, underlying EBITDA was negative 18.6 million. Now it's just below zero, and cash EBITDA went from negative 19.5 million to negative 1.7 million. So I think they're moving in the right direction. And even the CEO talked about things are moving in the right direction somewhere here, if I can remember. Where's his commentary? The CEO says, "We are very pleased to report the progress of Mayne Pharma as we continue our transition phase and simplify our business," which is fair enough. So let's have a look at the chart for Mayne Pharma. And I'll show you the weekly chart, just to show you the disappointment of this company over the past probably 6 years, maybe even longer. There was a period of time when this company was liked and looked, yeah, here it is. So share price of this company went to $42. I think there was some sort of consolidation, share consolidation. So share price didn't get to $42. This was in 2016. So the last 7 years, this company has disappointed and share price has fallen from $42 to $3.30. So possibly this is a turnaround for Mayne Pharma. And the market actually liked it. A nice little bounce, but it was a bounce off a low. It's not quite as low as the lows we saw in February this year, but it was a bounce off the low. So whether this low is sustainable remains to be seen. Some good volume coming in. So maybe this is a turnaround story. And maybe things can turn around for Mayne Pharma. Another company or standalone video I did was on Credit Corp. Share price of this company fell 30.5% on Wednesday, 18th of October. A nice little rally in the share price on Friday, the 20th of October. Share price rose 3%. Is this a dead cat bounce? More than likely it's a dead cat bounce. Volume decreasing, And most of the rise in share price on the 20th was in the first hour. Share price rose 4%. So I wouldn't be too excited about this company. And I have put this company on my watch list because if it continues to fall, there might be some value eventually for Credit Corp. Now, it's a company I've never followed, but maybe some of you do follow, and that is a company called Catalano Seafood. Who has heard of this company? Who has bought shares in this company? Unfortunately, if you have bought shares in this company, appointment of voluntary administrators announced on the 18th of October. You can see on the 21st of September, funding received via director loan. I was going to say zone. And I did actually have a read of the cash flow report. That's right. Okay, so the problem, here's what so look at the receipts, $3.4 million in receipts, but the company was operating cash flow negative $619,000. If you look at the cash on hand, they only had $556,000 cash on hand, proceeds from borrowings $205,000. So they did have a little bit of debt, not a lot of debt, but in Section 8, which is the important part, and this is why sometimes you should not always believe management. So and they have 1.2 quarters of estimated funding, and if a company has less than 2 quarters of estimated funding, they have to answer Section 8.6. So does the entity expect they will continue to have the current level of net operating cash flows for the time being? And if not, why not? Company believes that based on current revenue and cost figures of the company, it will continue to have similar levels of cash flow for the immediate future. And has the entity, in Section 2, has the entity taken any steps, or does it propose to take any steps to raise further cash to fund its operation? The company replied, the company has funding options available, etc., etc. The company and its management are confident the company will be able to secure funding in the near term to continue to fund its ongoing operations. And in Section 3, does the entity expect to be able to continue its operations, etc.? Yes, the company is confident that it's able to continue its operations and meet its business objectives. So this was in July this year. So 3 months later, after that particular cash flow report, they've gone into voluntary administrations. So why would you have been owning this company when the chart looks like this? So share price of this company has fallen from 21 cents down to 4 cents. A well-defined downtrend. Company is not cash flow positive, burning through cash, unprofitable, and that cash flow report and the cash on hand was not a good look for the company. So hopefully no shareholders of Catalano are watching this video. If there are, sorry. Now onto Netwealth. So this is another company fairly similar to Hub24. And I've written down here, business update, page 3. So I just want to show you page 3. I know exactly what I'm talking about when I want to show you page 3. So this is talking about funds under administration increasing. So if you do read Netwealth and Hub24, really nice growth in funds under administration and that sort of thing. And they have a really nice little section on page. Here it is. So the only reason I want to show you this because I just like what they've done here. So they're talking about the market share, funds under administration market share for these type of companies, managed funds, that sort of thing. So Insignia has the largest market share with 20.4%. In fact, I'm including Insignia in this video, later on in the video. CBA Colonial, 14%, BT Westpac, 13.2%, Macquarie, 12.7%, AMP, 12.3%, Netwealth, 7.1%, and then Hub24, 6.3%, and Premium, which is another company I follow a little bit, 2.2%. So Netwealth and Hub24 have around about 7 to 6% of the market share. But in the right-hand side graph, whatever you want to call it, platform provider net funds flow. And by far, the two best performing fund managers are Netwealth and Hub24. Netwealth, 9.8, and this is 12 months to June 23. Netwealth, $9.8 billion in net funds flow. Hub24 coming in second, $8.8 billion. Then we have Macquarie at 4.9, Premium 1.4. And then in red, we have AMP, Insignia, CBA Colonial, BT Westpac, which means the market share for both Netwealth and Hub24 is rising. And it could rise significantly further from here. They could become the two biggest fund managers, whatever you want to call them, on the ASX. So how did the market react? Well, down. So fairly similar to Hub24, and eventually the market reacted quite negatively, but this could be an opportunity Although you would say that both Hub24 and Netwealth are expensive. Netwealth has a P/E ratio of 50. Pretty sure Hub is pretty high as well. Hub has a P/E ratio of 70. $2.6 billion market cap for Hub. And for Netwealth, the market cap of this company is $3.6 billion, which makes sense. It's a slightly bigger company. So I actually am a customer of Netwealth, not a customer of Hub24, but I'm a shareholder of Hub24, not Netwealth. And if you just look at the chart for Netwealth, it's been going sideways for the last 3 years. Share price not doing anything. Anyway, so have a look at Netwealth. Next company is a company called Apiam Animal Health. A couple of reasons why I have started to follow this company is where the share price is right now. Now, the company did issue a performance update. So business update, trading update, performance update, they're all the same thing. I haven't really done any research on this company, apart from by the name of the company, Apiam Animal Health. This is sort of like a healthcare company for pets, for livestock, that sort of thing. And it's really interesting that they've mentioned here, solid trading, blah, 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 in the company's beef feedlot segment as the effect from El Nino weather conditions saw increased animal numbers across Apiam's feedlot client base. So that gives you an understanding of what this company does. So gross profit, $34.2 million, operating EBITDA growth. Now, one of the main problems about this company, when I have had a look at it in the past, is the margins are really low. So let's have a look at the chart right now and why I'm interested in this company at this point in time. Because the share price has fallen significantly. Share price has fallen from almost $1 to 30 cents. And the share price has fallen through the COVID-19 panic lows, which was around about 35 cents. So this company has a market cap of $53 million and nice growing revenues. Revenues have grown from $111 million in 2019 to $192 million in 2023. But again, this company has really low margins, profit of $2.3 million in the past year, so profit margin of 1.2, and profit margins have been falling in the last few years. So that's the reason why this company looks really cheap if you compare the market to the revenue. But just where the share price is right now, possible some value, possibly. But this is the all-time low share price for Apiam Animal Health. Although the share price did fall, if you look at the daily chart. So when this company, on the 12th of October, share price on that day decreased 14%. Did this company release anything on the 12th of October? Response to ASX price query, the market just panicked, looks like, on the 12th of October. So interesting company. I would like some numbers in regards to profit or cash flow in there for Apiam Healthcare, but possible company to put on your watch list. Enero, Enero, this is interesting. They had the AGM and a trading update, of course. And I'm just going to open up the general meeting and trading update announcement on the 19th of October. So we're talking about on the Thursday. It's really interesting. If you just look at the table, everything's going backwards. Is that the announcement I wanted? Yeah, it is an announcement I wanted. Thought it was something else. Okay, so if you just look at this particular table, they compare previous corresponding period. What they should have done, if they were being a little bit sneaky, is compare this quarter to the previous quarter. So the last quarter of financial year 23, because I do mention this quarter was better than that preceding quarter, but this quarter is significantly worse than the previous corresponding period. You can see that in the numbers. Net revenue down 20%, EBITDA down 45.6%, EBITDA margin down 10.4 percentage points. So it's really interesting. What's the second table? Anyway, but it's really interesting that they do mention here in quarter one, agencies are cycling a strong comparative period and revenue has declined 7% year on year, but above levels seen in the second half of financial year 23. So what they should have done is to sell how they performed in this quarter compared to the second half of last year, because those numbers would be higher than the previous corresponding period. So it's all in the numbers. Or what they could have done is compare it to the previous corresponding period and to the last few quarters, and maybe the numbers would have looked better. Now, I do think there could be some value in this company markup $154 million. Says here the price to earnings ratio is 2.6, but the market is expecting significantly lower earnings for this financial year. And I think there could be some value just because I think the market might be overreacting a little bit. But the share price is in a downtrend. The share price does look like it's moving sideways. If you do, particularly if you look at the share price over the past, say, 6 months, or almost 6 months, and the shorter term moving average channel is going sideways. So yeah, I'm sort of, wouldn't say I'm keen on buying Enero or adding to my position in Enero. I am actually a shareholder of this company now. And corporate travel management. Now the numbers look really good. So whenever you're comparing your numbers, you can make them look good. So there's sayings about that. You can always manipulate numbers so they look good. Now this is a company just like Enero, corporate travel management. This is another company I own, by the way. This is a long-term position. So this is another company compared this current quarter or first quarter to the previous corresponding period. And it makes sense why this company did it, because revenue and other income up 36%, underlying EBITDA up 157%, EBITDA to revenue margin up 89.2% to 30.1%. Off to a great start, result of new client win momentum in financial year 23. So I'm not going to go any further into, and it says financial year 24 consensus impact on track. So everything is moving in the right direction for corporate travel. But when you look at the chart, the market doesn't really like it. Share price is all over the place. So volatile, this company. Share price has been as high as $22 not that long ago and as low as $13.50 or $14 back in December last year. The market is just not sure about this company and other travel companies, but I too like the long-term future of corporate travel. Price earnings ratio 32.2, dividend yield 1.7%. I do think this company might be argued as being cheap right now, particularly when we're going to see their financial year 24 numbers. I think that might be quite eye-opening. Tourism, THL, tourism holiday holdings. So this company bought Apollo or something. Now, the reason I wanted to include this company, got here, AGM Aspirations, page 8. So this is the only reason why I wanted to include this company, because I did find this fact. I love when companies give long-term aspirations or long-term goals. So this is Tourism Holdings long-term goal. We have set a goal for this company to achieve $100 million in NPAT in the 2026 financial year. We do believe that our NPAT goal is achievable through organic growth and full synergy realization. We have every intention for ongoing growth beyond our $100 million goal. Now, here's the thing. This company has a markup of $683 million. So you just do the maths. If they're aiming for $100 million NPAT by 2026, that means a forward-looking PE ratio of this company is less than 7. The question is, can they achieve their goals? I like companies who set out goals, and if they set out goals, there's a good chance they might be able to meet them. And if they don't meet them, and this happened to Altium a few years ago, where they actually didn't quite meet their goals, but it's okay. The market loves these goals because it means there's less risk. You can put numbers into whatever cash flow analysis you do, discounted cash flow, and the market likes these sort of goals, these medium-term ambitions. Apart from that, when you look at the chart, it looks pretty blah at the moment. Not an uptrend, not a downtrend. Share price was as high as $4 recently, back in May of this year, but it must have done something, released something negative on the 9th of May. Share price fell 9% on that day. Onto ARB. This company had the AGM on the 19th, and the only reason I wanted to show you the ARB is because of the insanity in the market around this company. Let's have a look at the 1 hourly chart. So this is the 1 hourly chart. Actually, we'll look at the 5-minute chart. This is a case of, for some reason, when this company released their AGM and trading started on Thursday morning, the share price went from $29.30 and went to a low of $27. So the share price fell by about 10% on open. And within the next 20 minutes, the share price had already recovered and the share price kept on going. You just imagine you sold on open your ARB shares because you thought the AGM was negative, and then you see the share price recover and then increase later in the day, you'd be kicking yourself. This is one of the reasons why sometimes I won't react on open, because of that saying that the amateurs open the market, professionals close. Now, not all the time you will see this reaction. Sometimes it's best to sell on open because the share price just continues to drop. So I think it's really good and really handy to look at why the market has reacted, if you can, in that short period of time, and come to the opinion whether it's an overreaction or underreaction from the market, or if the reaction is fair enough. So that's why I wanted to include ARB. So 42 minutes. Next company I want to look at is, what was it? Oh, Insignia. Insignia used to be IIWF. What's it called? AFL. Share price in this company fell 12.8%. Why did the share price drop 12.8%? Insignia Financial announces CEO transition. The only market-sensitive announcement this company has released since they released their financial year results in August. They did have their AGM. They released the annual report on the 19th, corporate governance statement. But it looks like this negative reaction from the market was because of this CEO transition. So it seems like this CEO was well liked. On what marks his 20 years of service with the company, Insignia today announced the CEO, Renato Mota, has stepped down from his role effective end of February 2024 by mutual agreement. So either this guy was highly respected by the investment community, or it's just risk. The market doesn't like risk. They don't know who's a new CEO is going to be, because this CEO has been in this role for quite a while. So really negative reaction from the market. And you can see, just like, as I mentioned in the ARB, there was a sell-off on open, and that sell-off continued for the first 40 minutes of trading. There was a nice bounce, but then the sell-off continued. So this was definitely a good instance where you wanted to sell on open. And if we look at the daily chart, share price of this company just continues to fall. We ought to find downtrend. I'm going to look at the weekly chart just to see. Last time share price was this low. Look at the weekly chart. Share price has been a downtrend since 2018. And share price at $2.04 is at... Ooh, look at that. Ooh, that's interesting. Let's have a look at the monthly chart. This was unexpected. And zoom in. Okay. So if we do this, draw a line, the lows during the GFC were $2. The lows of this company now are $2. In fact, the low during the GFC was in March 2009, and that low was $2.16. So we are now at the all-time low for Insignia. That's sad. All right. Next company I want to discuss is Cleanaway. This was a profit downgrade. 15 minutes to finish this video. This is a profit downgrade. So it's financial year 24 earnings guidance. I had a quick look at this. It's a profit downgrade. So initially they were aiming for EBIT of between 370 and 390 million. Right there, that's weird. Cleanaway today announces earning guidance of approximately $350 million. Depreciation and amortization expenses are expected to be, okay, yeah. Not sure if this is a profit downgrade. I just saw 350 million and then the other number, 370 to 390 million. And that's $10 million lower. So this may not be a profit downgrade. Could be my mistake. It was just weird that they had earnings guidance and then a depreciation amortization expense. That's what happens when you quickly go through an announcement without even reading it. That's probably why there was not much of a sell-off of Cleanaway today. A 1.26% sell-off. Share price is at interesting levels for this company and has just fallen below the recent lows we saw in March. But if you look at the long-term chart, the weekly chart for this company, it's been in an uptrend since 2016. So possibly this uptrend has come to an end. Now onto Weebit. Weebit Nano. Bit of interest has built into this company the last few days. So up 13% today on the 20th of October. Share price increased 6.8% on the Thursday, 6.9% on the Wednesday. Some big volume coming in the last two, well, not big volume, some good volume coming in. And there was an announcement this company released on the Thursday, 19th of October. Weebit signs commercial agreement with DB High-Tech. What's the way to say this? I don't pay attention to these sort of announcements because there's no numbers here. I need numbers because I've seen plenty of these type of announcements without any numbers, and they're just frivolous. They don't mean anything. Doesn't matter if this DB High-Tech is a global top 10 foundry with annual revenue of more than $2 billion. There's a possibility that this agreement or this announcement, this license to DB High-Tech is a win-win for DB High-Tech and not much of a win for Weebit Nano. But it could be. It could be a good news for Weebit Nano. So let's have a look at the chart. Some excitement. And look at the daily chart. Share price was in a downtrend. And the share price is still in a downtrend. It is interesting that this excitement today occurred 2 days after the announcement, or the day after the announcement. So this is just fear of missing out, that sort of thing, traders potentially, but the share price is still in a downtrend. No end to that. Oh, Mount Gibson. Okay. Maybe I should do a standalone video on Mount Gibson. Share price up 6.7%. So I sold out of Appendix and bought into Mount Gibson just because I saw some pretty good value. And finally, the reasons why I sold out. So this company has a market cap of 500 million. 500, maybe 600 million. 577 million. So keep that in the back of your mind, 576 million. So this is their quarter report. So cash flow of 124 million for the September quarter, operating a significant increase in cash and investment reserves of 257 million at quarter end compared to 162 million at the end of financial or at the end of June 2023. So everything is moving in the right direction for Mount Gibson. This company potentially looks really cheap right now based off this quarter. Now, I haven't gone through this quarter with a fine comb because I've been busy today. But this quarter, this announcement looks really good, and this quarter looked really good. And it's not surprised to see a nice reaction from the market. Iron ore prices, were they down or up? Let's have a look. Iron ore prices down. So this has gone against iron ore prices, this reaction from the market in regards to or for Mount Gibson. And you can see the share price, for some reason, I don't know why, the share price was dropping. So hopefully this has shifted sentiment for the company. I'm not just hoping, but I still think there is really good value for Mount Gibson. Bluescope Steel, second last company I'll be looking at. Bluescope Steel. And market update on first half financial year 24 earnings guidance. I'm pretty sure if you look at the share price reaction, up 0.9%. So you might think this was an earnings upgrade. It's not. It's a profit downgrade. Today announced it now expects underlying earnings before interest and taxation, or EBIT, for the first half financial year 24 to be between 620 and 670. This is below the prior guidance range of 700 to 770 million. So this is the definition of a profit downgrade. So what, and this was released on the 20th of October. So why is the share price up? Well, maybe the price of steel's up, or maybe the market expected this sort of downgrade, which would mean the market is pretty smart, or just look at the share price. It has significantly created over the past month and a bit. Share price has fallen from $20.20 to $17.90. So it seems like the market has been sort of anticipating this sort of profit downgrade from a Bluescope Steel. So sometimes when a company does release a profit downgrade, the share price might not drop 20 to 30%, like some like for some other companies. And the last company I want to look at is Syrah. Okay. So this probably more belongs in the technical update video. They released their activities report on the 17th, which was 2019 Tuesday. It was not a good cash flow report, activities report. And I'll just show you this. Just by looking at the cash flow report, burning through lots and lots of cash. Receipts to customers for $15 million, burned through $13.8 million in operating cash flow, spent another $37.2 million on capital expenditure. Cash fell from $100 million to $80 million. So how did the market react? On the 17th, the share price fell, rose 1%, fell 6% the next day, rose 2% on the Thursday, but rose 16.5% on Friday. And this is where it becomes interesting and why I just decided to include this company in this particular chart. Share price is still in a downtrend. That's not up for debate. It's still in a downtrend. Some really big volume coming through in Friday. So when you compare the volume today, 20 million shares compared to what you usually expect, it's a high volume day. So what's happened? But let's have a look at a shorter time period. Let's have a look at the 1 hourly chart. And when you look at the 1 hourly chart, something really catches your eye. Massive volume coming in the last 3 trading hours, in particular, the last hour of trading. And in that last hour of trading, share price of this company rose 10.4% after rising 8.6% the previous hour. In fact, the share price was down in the first 2 hours of trading. Share price went as low as 42 cents. So share price today went from 42 cents to 53 cents on really big volume. Now, that does not mean that there's some loose lips out there and some news flows coming. The other thing I like to point out, when you look at the 1 hourly chart, you can see the share price has just moved above the longer term moving average. And if you go to the past, in October this year and September, this is a 1 hourly chart. So the last 2 times the share price has just gone above the longer term moving average in the 1 hourly chart. The share price has faltered. Will this happen again? And you can just see, if you look at the 5-minute chart, there's just, for some reason, there was a massive increase in interest in this company at around about midday. You saw some big volume coming in, and the share price just took off. Something happened. Something must have happened around about midday today. I don't know, haven't been following anything. So if you do know what happened at about midday today, that really positively affected Syrah Resources, love to hear your opinion. Now, that's all I've got for today. Now, sometimes at the end of training, I always look at market index, have a look at the top gainers, and I usually list it by market cap. So Weebit Nano was one of the best performing companies in terms of market cap. Syrah Resources was there too. Gibson was there. Companies I did not look at, K&S Corporation. Some of this could just be noise, big tin can, not a lot of good performers above $100 million. But if we look at top losers, by far the worst performing company today was Liontown Resources. Not unexpected. Wide Open Agriculture, should have done a video on that because they had been in suspension for a long time. Share price down at 23% today. Did they come out of suspension today or was that yesterday? Yeah, it was yesterday. Oh, gee, look at that. Extraordinary. So the last time this company traded was on the 19th of April when the share price rose 54.8%. Then it came out of the trading halt yesterday. Share price dropped 48%. It dropped another 23.5%. Let's have a look at Wide Open. And we'll look at the daily chart. It's been an insane ride for Wide Open. Look at that. That's insanity. Share price was as high as about 40 cents the last time it traded, and now it's at 13 cents. And then the shares weren't traded for, 6 months. Insanity when it comes to Wide Open Agriculture. So we list this by market cap. Telix Pharmaceuticals, market overreacting there, in my opinion. Lumina, they did release some sort of update, so I have not included that company. Insignia, Alpha HPA, Kogan, I didn't see any announcement from that company. Impedimed, Volpara did release their Appendix 4C yesterday. I will do a video on that. Another possible overreaction for the market. I think it was okay. ARB Resources, Freelancer, some big movements of some companies today. Oh, okay. So that's all I got for today's video. If you have any questions about any companies I've featured, leave your thoughts in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.